Thank you, Mr. President. Are you reconsidering your plan to cut the interest rate deduction for mortgages and for charities? And do you regret having proposed that in the first place?
No, I think it's the right thing to do, where we've got to make some difficult choices. Here's what we did with respect to tax policy. What we said was that over the last decade, the average worker, the average family, have seen their wages and incomes flat. Even at times where supposedly we were in the middle of an economic boom, as a practical matter, their incomes didn't go up. And so what we said, let's give them a tax cut. Let's give them some relief, some help. 95% of American families. Now, for the top 5%, they're the ones who typically saw huge gains in their income. I fall in that category. And what we've said is, for those folks, let's not renew the Bush tax cuts. So let's go back to the rates that existed back in during the Clinton era, when wealthy people were still wealthy and doing just fine. And let's look at the level at which people can itemize their deductions. And what we've said is, let's go back to the rate that existed under Ronald Reagan. People are still going to be able to make charitable contributions. It just means if you give $100 and you're in this tax bracket at a certain point, instead of being able to write off 36 or 39%, you're writing off 28%. Now, if it's really a charitable contribution, I'm assuming that that shouldn't be the determining factor as to whether you're giving that $100 to the homeless shelter down the street. And so this provision would affect about 1% of the American people. They would still get deductions. It's just that they wouldn't be able to write off 39%. In that sense, what it would do is it would equalize. When I give $100, I'd get the same amount of deduction as when a bus driver who's making $50,000 a year or $40,000 a year gives that same $100. Right now, he gets 28%. He gets to write off 28%. I get to write off 39%. I don't think that's fair. So I think this was a good idea. I think it is a realistic way for us to raise some revenue from people who benefited enormously over the last several years. It's not going to cripple them. They'll still be well-to-do. And ultimately, if we're going to tackle the serious problems that we've got, then in some cases, those who are more fortunate are going to have to pay a little bit more.
It's not the well-to-do people, it's the charities. Given what you've just said, yeah, are you confident the charities are wrong when they contend that this would discourage giving?
Yes, I am. I mean, if you look at the evidence, there's very little evidence that this has a significant impact on charitable giving. I'll tell you what has a significant impact on charitable giving is a financial crisis and an economy that's contracting. And so the most important thing that I can do for charitable giving is to fix the economy, to get banks lending again, to get businesses opening their doors again, to get people back to work again. Then I think charities will do just fine.